And there you have it on your screen. Let's just pull up the opening trades then and see how we are doing on first glance. At the moment, definitely it does look like, once again, we're just a touch in the red at the moment. So not looking like, the best start, but let's just see how this one goes, because it could still go pretty much either way at this point. At least that's that's really the key takeaway. As we can't really define the trend for the day at this point, given what we're noticing. But let's pull up perhaps some of the names that are catching our eye. Declines definitely outpacing the advances right now. So there is still continued pressure on open. We've got some green on the screen, as you can see on the bottom there. But let's also take a look at where the pressure is building up. And the Nifty seeing that little bit of a downtick. So we've got Z, of course, on the downside this morning. We've got HDFC that's seeing just a marginal downtick as well coming in. Let's take a look at what else perhaps is also losing ground in early trade, and just pull up a bigger picture for us in terms of really where perhaps the markets are lagging behind. Otherwise, of course, we've got coal, GAIL, a couple of the commodity names that are managing to stand out this morning. So Aisha, it looks like at this point it's not necessarily all that's lost, but definitely some pressure continues to be there at this point of time.
We're sub the 9200 mark, so call it what you may. Since yesterday, we've seen quite a bit of fall really coming in. I mean, yesterday you thought that we're going to manage to arrest Monday's losses or so, but we caved into that as well and closed in 1% lower. Again, it's a very feeble start, and the bigger problem today is the market breadth, because that's decisively in favor of the declines. As feeble as the Nifty may be, the bigger problem today is with the broader markets. It's the OMCs, which rightly so are the ones which are under pressure. Look at HPCL, that's down 9.25%. BPCL down 6.5%. IOC down 5% as we speak. And this was bound to happen, given that now the government has actually imposed that duty on OMCs. They've upped the taxes on petrol and diesel by 10 and 13 rupees per litre. Clearly a negative for OMCs, because they will be having to bear the brunt and not quite the consumers. And the stock price is only reflecting that. In news that the government may be mulling a stake sale in Axis as well as ITC. So I just want to quickly check in on those names. Axis, as I see on my screens, is down by about 4.25%. ITC lower by 3.25% as well. Though on the flip side, a positive reaction after its numbers for NIT Tech. The numbers were in line. Equitas holding out, Godrej Properties, ONGC, and Glenmark continues to be a big winner, still holding up by about 4%. Nikunj?
Let me now bring on board Nilesh Shah of Kotak AMC to take the conversation forward. Nilesh bhai, good morning. Thank you for joining us. In the month of March, Nilesh bhai, we were using words like excruciating fall, panic, financial Armageddon. In the month of April, we have used things like sharp comeback, bulls are back, and the feeling of FOMO. Markets overshot themselves on downside in March, but have they overshot themselves in the month of April and in May? And do you think a sharpish correction is now around the corner?
Nikunj, everything will depend upon intersection of medical solution and fiscal and monetary stimulus. If we are lucky and we get early medical solution and we get fiscal and monetary stimulus, which is more than needed by the economy, then markets will stabilize. However, in that unfortunate scenario where medical solution is delayed and we don't get fiscal and monetary stimulus which is required by the economy, then certainly markets will continue to slide. I think this is where markets and economy both will be looking forward to, intersection of medical solution and fiscal and monetary stimulus.
So why have markets run up despite no clear medical solution in sight? It's not only our markets but globally also. I mean, I looked at last week's data. Nasdaq is in the green. Now when world is falling apart, Nasdaq has managed to close in the green, and Dow also is not down more than 20%. So can I safely assume that somewhere the markets had run up ahead of themselves and now normalization will happen?
It's difficult to say whether markets have run up ahead or below, because they are constantly discounting news. Now, on one side, central banks have printed huge liquidity. Fed's balance sheet has exceeded 6 trillion for the first time, and as we speak, who knows, it might exceed even $7 trillion. So this money which has been printed is bound to inflate asset prices. That's probably happening on the global side. Second, there has been some interesting developments on the medical solution side. Yesterday we heard news in Israel, University of Oxford we have heard about. Italy also made some news. Now there may be sensation, there may be reality, who knows. But market is constantly trying to analyze data to find out a solution. But looking at Indian market, clearly there were a couple of factors which pulled market from 7,600 onwards. One was proposed increase in weightage by MSCI to FTSE Russell. MSCI is likely to increase India's weightage by about 8% till by 30th June. FTSE Russell is likely to increase by up to 17% from here till 31st of August. Both this proposed weightage increase in benchmark indices is likely to result into FPI flows. So that could have given one push to the market. Second could be the pure valuation. In October 2008, at 8,000 Sensex, market cap to GDP ratio had come down to 43%. And at 7,600 Nifty, market cap to GDP ratio was 47%. So cheap valuation also probably pulled some people to buy, and combination of that probably resulted into market bouncing back in the month of April. But we cannot certainly say that markets have bottomed out till such time a durable medical solution emerges.